Shall we? Are we getting retirement of a partner? Listen, I do not want to go into reasons like why partner retire. Bore return or sometimes like there is a quarrel or fight amongst the partners, they want to retire, or a partner would like to go for a separate business on his own. So retirement can happen because of various reasons. But we are here to do accounting for retirement. Which one? Accounting for which one? Retirement. Same like admission. In case of retirement also, we are going to follow the steps. What is the step one? We'll see which ratio. Old ratio and which one? New ratio. Please listen. In case of retirement, which ratio will be more? New ratio will be more than the old ratio. For example, if 10 rupees profit is earned, old partners were sharing in 5:3:2. If 10 rupees profit is earned, how much old partners were sharing? 5:3:2. Let's assume the third partner retired. Okay, now 10 rupees profit we make. This profit may be 6 rupees shared by first partner and 4 rupees shared by what? Second partner. If you look at old ratio to new ratio, which ratio will be high? New ratio will be high. That's why we call it as gaining ratio. Gaining ratio. So the difference between which ratio? New ratio minus what? Old ratio is called as which ratio? Gaining ratio. There is nothing much to discuss in this. Step 1, see the new ratio, see the old ratio. Difference is which ratio? Gaining ratio. Please take it up along with me. Step 1, old ratio will be definitely greater than new ratio. Sorry, lesser than new ratio, or new ratio will be greater than old ratio. New ratio minus old ratio gives us which ratio? Gaining ratio. Step 2. What was step 2 in admission of a partner? Goodwill. Here also we are going to follow the method. What was the method we followed? 3 methods we followed. Don't copy this. I'll give you time to copy. Pay attention. 3 methods we followed. What is the first method? Revaluation method. Goodwill account data to old partners capital account. Otherwise, partners capital account in which ratio? Old ratio. If the goodwill is written off, simple. Continuing partners capital account data to goodwill in which ratio? Admission also this is possible. Admission also what is possible? Raise the goodwill to which partners? All partners in which ratio? Old ratio. Write off the goodwill to continuing partners. Continuing partners in which ratio? New ratio. This is also possible at the time of retirement. Whether anybody joins the firm or whether anybody is joining the firm or partners are retiring. So premium method is not possible. Premium method is not possible. But what is possible? We can adjust the goodwill through capital account. We can adjust through which account? Capital account. How to adjust through capital account? Simple. Here, gaining partner to sacrificing partner. Who's the gaining partner? Continuing partners capital account data or to retiring partners capital account. Continuing partners capital account data to retiring partners capital account. Which ratio? Remember I told you at the time of admission of partner itself, the concept is gaining partner will compensate sacrificing partner. Which partner? Gaining partner will compensate which partner? Sacrificing partner. Gaining partner will compensate always which partner? Sacrificing partner. Here, which partners are gaining? Continuing partners are gaining. So, continuing partners will compensate which partners? Sacrificing partner. Who is a sacrificing partner? Retiring partner. So, goodwill can be adjusted through capital account. So, at the time of retirement of partner, only 2 methods are possible. What are the 2 methods? Revaluation method. Pay attention. Goodwill account data to all partners capital in which ratio? Old ratio. Write off after the retirement. After the retirement, if the goodwill is written off, what will happen? Continuing partners capital account data to goodwill in which ratio? New ratio. Or goodwill can be adjusted through capital. Continuing partners capital to retiring partners capital in which ratio? Gaining ratio. Only 2 methods are possible for both goodwill and JLP. And which one? Joint life policy. Here also surrender value now. Wait, when the firm will get policy value? When the firm will get policy value? Only on the death of a partner. On retirement of a partner, the firm will get only which value? So if it is JLP, we will put goodwill account debtor or which account? Joint life policy account debtor. Joint life policy account debtor to which account? All partners capital account. Then continuing partners capital account debtor to goodwill account or which account? JLP account, like that you can put. So if it is joint life policy, record in joint life policy account. If it is goodwill, record in which account? Goodwill account. So let it be goodwill or JLP. Either revaluation method possible, or you can adjust the goodwill through which account? Capital account, that is possible. Take up this. Done. So goodwill, revalue or adjust through which account? Capital account. So how to decide? It will be given in the question. For example, look at question number 7. Parangale. No goodwill is raised. No goodwill is raised, which means goodwill is adjusted through which account? Capital account, like that. So we'll see that. It will be clearly mentioned. When goodwill is raised, they will give you. If it is not raised, also they will specify it. Take up this. Next, step 3. Step 3, which account? Revaluation account. This is same as admission of a partner. Same as which one? Admission of partner. What do we do in revaluation account? We credit the gains, debit the losses. Same like this. We'll prepare revaluation account. Don't copy this. Okay. We'll credit the gains and debit the losses. In which account? Revaluation account. Okay. We'll credit the gains and debit the losses. Profit will be shared in which ratio? Old ratio. That is same like admission of a partner. There is no difference. Wait, will you prepare memorandum revaluation account? Admission, when we used to prepare memorandum revaluation account? When the partners not to alter assets and liability value. In retirement also, if the continuing partners do not want to alter assets and liabilities, now we will prepare which account? Note. Memorandum revaluation account. Should be prepared, please note. Memorandum revaluation account should be prepared when assets and liabilities are not to be altered. Memorandum revaluation account we will prepare when assets and liability value is not what? Altered. Simple. In that we will have two parts, right? Don't copy this. Revaluation account will be part 1, where we will record the gains and debit the losses, and the profit will be transferred to whom? Profit will be transferred to all partners. In which ratio? In which ratio? Old ratio. All partners in which ratio? Old ratio. All partners in old ratio. Then second will be whatever you debited here, you will credit here. Last nu podum. Then in your gains, you will reverse it. The second part loss will come. The second part loss will come. The loss will be transferring to what? Continuing partners. Continuing partners in which ratio? New ratio. This is which account? Memorandum revaluation account. We'll do that. Same like which one? Admission of a partner. Once again, old ratio, new ratio, and which ratio we see? Gaining ratio. Goodwill, there is a difference. Raise the goodwill to all partners in old ratio. If the above goodwill is written off, write off to what? Continuing partners. It can be adjusted through capital account also. Revaluation account, same as admission of a partner. What is step 4? What is step 4 we used to do? Prepare which account? Capital account also, same as admission. Same as admission. But listen, in case of admission, new partner brings in cash. In case of retirement, capital account, what to do? Same as admission. Everything is same as admission. What about retiring partners capital? What about retiring partners capital? Simple. Either it is settled. Either it is settled. What do you mean by settled? Pay cash. If money is not there, transfer to which account? Transfer to loan account. We'll pay it in the future. Retiring partner, if cash is available, you pay it. If it is not, transferred to which account? Loan account. How to identify in the exam question, they will clearly mention. Retiring partners capital is settled. Or in some question, they will mention retiring partners capital is transferred to which account? Loan account. Or some question, they will mention 5,000 is paid now. Remaining is transferred to which account? Loan account. Like that, they will mention. That is the difference. Take up. Step 4, capital account you prepare same as admission of partner. Retiring partners capital is either settled or transferred to which account? Loan account. And of course, step 5. Step 5, what do you do? Prepare balance sheet after retirement. Prepare balance sheet after retirement. So capital account also same as admission now, but only difference is the retiring partner's capital is transferred to which account? Loan account or settled immediately. Then prepare the balance sheet with new assets and liabilities value after retirement. So if you understand adjustments on admission, in the same line we think for which one? Retirement also. Admission of partner, it would have taken lengthy time to understand. Retirement of partner, just think reverse. Gaining ratio, raise and write off goodwill or JLP or adjust through capital account, prepare revaluation account, capital account, and which one? Balance sheet. Now what I request is, we'll do question number 7, then we'll go for question number 6 later. This treatment of joint life policy we'll learn at the time of death of a partner. At the time of death of a partner, we'll come to it. Come to question number 7. Take up this. Read question number 7 fully. On 31st March 2002, balance sheet of which partner is given? UVW. Sharing profits and losses in proportion to their capital. Look at profit sharing ratio is the capital ratio in this question. What is the ratio? They share in the ratio of capital 2:3:2. 2:3:2. Then, actually the 2002, 2014. 2014. On 31st March 2014, who decided to retire? The first partner. The first partner retires from the firm. Remaining partners decided to carry on. They have given assets and liabilities value. Look at point number A. Land and building appreciated by 30%. Machinery depreciated by 30%. Closing stock value is given. Then closing provision for bad debts is given. Then old credit balances to be written back is given. Point number A, B, C, D, E. All these are connected to which account? Revaluation account. All these are connected with revaluation account. Revaluation account. Then point number F, paranga. Joint life policy of the partner surrendered and cash is received. It is like sale of asset. What is the entry for sale of asset? Cash account debtor to asset. Cash account debtor to JLP. This investment is made by partner or firm. Last class we had seen joint life policy is an investment made by the firm. So this will be shared by all partners. This will be shared by all partners. Then goodwill of the entire firm is fixed at 1,40,000. Retiring partner share, U share of goodwill will be adjusted in which one? B and W profit. Who will share future profits equally? Who will share future profits equally? So which method we are going to follow? Revaluation method or adjustment through capital account? Revaluation method, goodwill raised னு சொல்லிருக்கானா பாருங்க, என்ன சொல்லிருக்கான்? It is adjusted in capital account of V and W. Adjusted through which account? Capital account. Point number H. Total capital of the firm should be same as before retirement. Individual capital also should be in which ratio? Profit sharing ratio. That should be for capital. Look at the point number I. The retiring partner, amount due to you, how much is settled? 50% is settled on retirement. Simple. Tally use column, 50% pay cash to cash. Remaining 50% within 1 year means as of now we will be transferring to which account? Loan account. We will pay it later. So while preparing capital account, first you will tally which column? Retiring partner's capital. 50% you settle. Remaining amount you transfer to which account? Loan account. Start. This is for question number 7. Retirement of a partner. What is step 1? We want old ratio, new ratio and gaining ratio. Who are the partners? U, V, W. What is the old ratio in proportion of capital? What is the capital? 2:3:2. New ratio, it is given equally. Where it is given? Along with goodwill adjustment they have given. Point number G. Point number G. Who share future profits equally. So new ratios 1:1. Which partner? You retired. Which partner? B and W will share the profits equally. In this question, do we require a gaining ratio? Do you require a gaining ratio? Yes. Goodwill is adjusted through capital account. We require which ratio? Gaining ratio, because goodwill is adjusted through capital account. How to work out gaining ratio? New ratio minus old ratio. For which partner? W, V and W. What is the new ratio of V? 1/2. 1/2 is the new ratio minus old ratio 3/7. Second partner 1/2 minus 2/7. New ratio minus old ratio will give us the ratio. LCM எடுத்தா 7 minus 6/14 வரும். 7 minus 6/14. This will be like 1/14. This one 7 minus 4/14. Three by 14 over. So 1:3 is the gaining ratio. We want this gaining ratio because goodwill is adjusted through which account? Capital account. 1:3 is the gaining ratio. Shall we start? Step 2. Adjustment for goodwill and JLP. Adjustment for goodwill and which one? Joint life policy. Joint life policy. Which value we have to adjust? Surrendered and cash. Thank you. Surrendered for how much? 80,000. Surrendered for 80,000. Given in the question. It is like sale of an asset. What is the entry for sale of an asset? Start. Pass entry. Cash or bank account data to JLP account. Joint life policy account. How much? 80,000. Any benefit from the investment made by the firm will go to whom? All partners in which ratio? Old ratio. Old ratio. JLP account data 80,000 to which partner? To U's capital, to V's capital, and to W's capital. In which ratio? Old ratio. This is a goodwill generated in the past or JLP generated in the past that will go to the partners in old ratio. Simple. 80,000 into 2 by 7. 80,000 into 3 by 7. 2 by 7. Transfer to partners in which ratio? Old ratio. This is for joint life policy. Any doubt in the journal entry? Bank account data to JLP, how it comes? You got the money. Bank account data to JLP, how much we got? 80,000. JLP account data to UVW, transfer it in which ratio? Transfer in which ratio? Old ratio. Then, adjustment number. Which adjustment number talks about goodwill? G. Goodwill, 1,40,000. What to do with this goodwill? You share to be adjusted in capital. The new retiring partner share should be adjusted in which account? Capital account. How to adjust it? In the which ratio? Gaining ratio. Simple. V's capital account data. Take it along with me. V's capital account data. W's capital account data. Continuing partners to retiring partner. Continuing partners capital account data to which account? Retiring partners capital account. What is U share? 1,40,000. 1,40,000. What will be the U share? How much share? 1,40,000 into 2 by 7. 1,40,000 into 2 by 7. How much? The 40,000 clear. This 40,000 should be adjusted amongst other partners in which ratio? Gaining ratio, not new ratio. Gaining ratio work பண்ணிருக்கோம் பாருங்க. 1:3. 1:3. We worked out gaining ratio. 1:3 is the gaining ratio. 1 by 14, 3 by 14. Gaining ratios 1:3. Be careful. The goodwill is not revaluation method. This is adjusted through which account? Capital account. Gaining ratio. How much it will be? 10,000, 30,000. See, more than accounts. Listen for a minute. More than as an accounts. Think with the logic. Let's assume I'm you, retiring. Okay. You are V and W. You are V and W. What is my share of goodwill? 1,40,000 into 2 by 7, 40,000. Who should contribute this? Continuing partner should contribute this. In which ratio? The ratio in which you gained. Clear? 1 by 14, we gained. 3 by 14 what? W gained. So 1:3. Now people will have a doubt. Sir, 1 by 14, 3 by 14. Nana, 1 by 4, 3 by 4 doubt. Simple. Goodwill. What is the total goodwill? What is the total goodwill? 1,40,000 into 1 by 14. 1,40,000 into 1 by 14, how much? 10,000. 1,40,000 into 3 by 14 will give us what? 30,000. If we take based on total, 1 by 14, 3 by 14. If we work based on the new partner, that is retiring partner, it is just 1:3. Take up this. Goodwill is adjusted in gaining ratio. Joint life policy is surrendered. The profit or gain from the policy transferred in old ratio. Compare old position with new position. V gains 1 by 14, 3, W gains what? 3 by 14. To the extent you gain from old to new, in that ratio, this will be adjusted. Now start step 4 that you can do. This is the 6th problem or 7th problem you are doing. Step number 4, which account? Revaluation account, same as admission of partner. Debit the losses, credit the gains, and tell me the profit or loss. This is based on which adjustment? This is based on which adjustment? A, B, C, D, E. All these are talking about which account? Revaluation account. Record this. Profit will come. That profit, what will you do? Profit will be shared in old ratio amongst all partners. This is not new one. Same like admission of a partner. Record the gains and losses. Transfer the profit to all partners in which ratio? Old ratio. Buy land and buildings. Much? What percentage appreciation? 30% of land and building will be 60,000. To plant and machinery, 20% of plant and machinery, 2 lakhs, 3 lakhs into 20% also, 60,000. Then, closing stock, increase or reduce or closing stock, 1 lakh old value, new value 75,000. To stock, 75,000 new value, already 1 lakh value. So, loss, 25,000. Then, which one next? To provision for bad debts. எவ்வளோ percentage create பண்ண சொல்லியிருக்கான்? 5% provision on debtors. Debtors balance into 5%. Debtors balance 1 lakh into 5%, 5,000. Next point think பண்ணுங்க. Yes. Next one. How will you deal with point number E? Old credit balance of sundry creditors 20,000 written back. What is the meaning? Will you put by creditors or to creditors? Why by creditors? Written back means okay, திருப்பி நம்ம pay பண்ண அப்படி கிடையாது. Okay. Written back means we need not pay. Old credit balances written back means debited. We need not pay. Creditors account, what need not be paid? 20,000 need not be paid. Transfer this, you will get a loss. What is the loss? 10,000. That loss will be transferred in which ratio? Old ratio. Loss will be transferred to partners in old ratio. 2:3:2. It is a loss that happened in the past. So it should be transferred to old partners in old ratio. Who are the partners? Transfer the loss. 10,000 into 2/7. 10,000 into 3/7. 10,000 into 2/7. What is step 4? Prepare which account? Capital account. Try to do capital account. Don't close capital account alone. Just record all the transactions part. Prepare the capital account next. Buy balance brought down எல்லாருக்கு பாருங்க. Buy balance brought down 2 lakhs, 3 lakhs and what? 2 lakhs. Then if you find any general reserve or P&L account balance, nothing. Then revaluation loss இருக்கு. JLP பாருங்க, adjustment, joint life policy and the surrendered, transferred in old ratio. What was the transfer surrender old ratio? 22,857, then 34,286, then 22,857. Then goodwill adjustment journal entry பாருங்க, entry pass பண்றோம். Be careful about it. V's capital should be debited, W's capital should be debited. What even be debited? Right in left hand side. Right in which side? Left hand side. To use capital. In which column? V's column how much? 10,000 debit பண்ணுங்க. W's column how much you debit? 30,000. Credit side la by use capital V and W's capital. In which column you have to credit? Once again I repeat, debit V and W. What do you mean by debit V and W? Record in debit side of V and W. Record in debit side of which one? V and W. Which one should be credited? U should be credited. How much should be credited? 40,000. Otherwise, V and W is debited because of use capital. Here, use capital is credited because of what? V and W's capital. Then, revaluation loss. Revaluation loss போட்டிருக்கோம். எவ்வளவு போட்டிருக்கோம்? 2857, 4286, 2857. Any general reserve? P&L account? Advertisement suspense and the money? Advertisement expenditure, all those things? No. No general reserve, no P&L account, no advertisement expense. If it was there, we would have transferred in which ratio? Old ratio. Once again, opening balance 2 lakh, 3 lakh, 2 lakh. By JLP surrendered how much? Transfer to old partners, goodwill adjustment, credit you with 40,000. Credit you with 40,000. Debit whom? V and W with 10 and 30,000. Revaluation loss is adjusted. இப்போ first என்ன பண்ணணும்? What to do next? Who retired? You retired. Get me the balance. You had a balancing for parangla. 2 lakh 22,857 40,000 minus this. Balancing for parang. To cash, how much is settled? 50% is settled. 50% is settled. It is given clearly in the question. 1 lakh 30,000 வரும் 2 lakh 60,000 balancing போறோம் அதுல 50% you settle. Balance will be transferred to which account? Use loan account. Balance 50% is transferred to loan account. 50% settled immediately. Remaining 50% transferred to which account? Loan account 1 lakh 30. So like this, first close which account? Retiring partners capital. Clearly mentioned. Look at the last adjustment. Adjustment number 9. I. The amount due to you settled 50% on retirement and balance within what? 1 year. That's why we settled the 50%. Remaining transfer to what? Use loan account. Wait. Normal enna பண்ணுவோம்? To balance carry down, we'll put for remaining partners as which one? Balancing for we'll put it. But in this question it is not so. That's why I asked you read the question fully. Point number H பாருங்களேன். என்ன சொல்லிருக்கோம்? Point number H, what is given? Total capital of the firm should be same as before retirement. Before retirement பாருங்க, what is the capital of the firm? Take the question. 2 lakh, 3 lakh, 2 lakh. What is the total capital? 7 lakh, they want to keep the same. They want to keep the same. And what is given? Individual capital should be in which ratio? Profit sharing ratio. So, for this, let me do this working. Total capital should be same as before what? Retirement. That is 2 lakhs plus 3 lakhs plus 2 lakhs. What is the total? 7 lakhs. Individual capital of the partners. Who are the partners? Continuing. B and W continuing. In which ratio? Equal ratio. They are going to continue in which ratio? Equal ratio la continue panna poranga. So that they should maintain a capital of how much? 3,50,000 is to 3,50,000 they should maintain. The partner should maintain in the new ratio. So to balance carry down is 3,50,000, 3,50,000. Please remember it is not a balancing for, it is instructed to us. What is instructed to us? Capital should be same as before retirement. Ensure that the continuing partners are maintaining in which ratio? New profit sharing ratio, which is which ratio? Equal ratio, 3,50,000, 3,50,000. Tally this, you will get by cash as a balancing for. The shortage on shortage they should bring it. Total minus the debit balances, they have to bring it. W also should bring it. This is a balancing for in this question. This is not a balancing for. 3,50,000, 3,50,000, we worked out. Why it is so? It is instructed to us. So to balance carry down, we did a working note. Take up this. Prepare the balance sheet after retirement of you. Just a minute recollection that is important to continue. Pay attention. Old ratio, new ratio. Any doubt in it? It is given in the question. Why are we working out gaining ratio in this question? Why are we working out gaining ratio? Because retirement of partner nala gaining ratio illa. Goodwill is suggested through which account? Capital account. Simple. The logic is gaining partner should compensate which partner? Sacrificing partner. Who is a sacrificing partner? Retiring partner is a sacrificing partner. Who are gaining? The partners who are continuing are gaining. Clear? So continuing partners to retiring partner. That is the logic. Clear? 40,000 அவனுக்கு settle பண்ணணும். அது யாரு gain பண்றாங்களோ, ratio gain பண்றாங்களோ, they have to give the compensation. JLP surrendered. So whatever is surrendered, be transferred to capital. Devaluation account, nothing new. Credit the gains and debit what? Losses. Net loss is transferred to partners in which ratio? Old ratio. Then we prepare the capital account. First 50% is settled to you. Remaining transferred to which account? Use loan account. Then capital should be same as before retirement. This 3,50,000 we maintain. 30,000 and 1,60,000 is the cash they have to bring in. Start. Balance sheet after retirement. Let us maintain the same order in which old balance sheet is given. Capital accounts. Start. Capital account of which partner? U is retired. How much? W and what? B and W. What is the capital balance? 3,50,000. 3,50,000 total over 7 lakhs. Then loan account of you. Loan account of you, that balancing for on the 50%. 1,30,000 loan account of you will come. Then old balance sheet la parunga. Creditors. No devaluation of creditors. No. Yes. 1,20,000 return back nu sollirka. Old credit balance is written back 20,000. So balance 80,000 will come. Then assets and assets irukku. Land and building 2 lakhs plus evlo percentage? 30%, 2,60,000. Land and building. Then plant and machinery, how much? 3 lakhs plus, minus 20%. 2,40,000. Then closing stock revalued amount given 70. Then sundry debtors minus provision. Debtors minus provision how much? 95,000. Cash at bank will change. What is opening balance given? 1 lakh. Add JLP where surrender panirko. JLP realized how much? 80,000. Add capital of B. B brought in how much? B brought 30,000. Add W brought capital account or balancing figure 1 lakh and be paid to you. Less paid to you how much? I repeat, capital account of V and W, the closing balances will come. Loan account of you, 50% is not settled, that will come. Creditors after rating back 20,000, 80,000. Land and building 2 lakh plus 30%. Plant and machinery 3 lakhs plus minus 20%. Closing stock value directly given in the adjustment. Debtors minus provision for bad debts 5%. Put 95,000 will come. Cash balance, JLP we got money. We got money from V and W minus paid to you, net 2,40,000 will come. Goodwill will not come in the books. Goodwill will not come in the books. Why? Goodwill is adjusted through capital account. JLP also will not come in books. Why? We got cash. Journal entry paranga. Cash account data to JLP. That is transferred to old partners in old ratio. Even JLP will not come in the cash balance sheet because it is already realized. Goodwill is not appearing because it is adjusted through capital account. Did you raise the goodwill? No. You have not raised the goodwill or written off the goodwill. Those who completed this, please go to one of the wonderful question in retirement of partner. Question number what? 6. Okay. It's a fantastic question to solve in the class. Of course, examination, unless you tried this in the class, the answer will not be 100% pakka because it has lengthy adjustments. It has what? Lengthy adjustments. Those who completed this, please go to question number 6. You must go through all the adjustments. You must go through all the adjustments at least twice or thrice to understand, then we can solve. Read the balance sheet first, read all the adjustments. A, B, C, D like that, adjustments are given. Please go through that, then we will solve. This is question number 6. Capital of partners, old ratio 4:3:2. Who retired? M retired. M retired. So, new ratio is given in the adjustment. 5:. 5:3 தானே 5/8 3/8. M retired, no ratio for him. Step 1. Do you require gaining ratio in this question? Gaining ratio வேணும் ஆமா. Why? Goodwill is adjusted through capital account. Even JLP is also adjusted through what? Capital account. We want gaining ratio. Now start. G and men, capital ratio is the ratio in which they share the profits. Old ratio, new ratio. We want which ratio? Gaining ratio. How to work out gaining ratio? New ratio minus who are the continuing partners? Work out. For G, what is the new ratio? 5 by 8 minus what is old ratio? We take LCM. So this will become how much? 14 by a 13 by a 13 by 72. For the other partner N, what is old new ratio? 3 by 8 minus 2 by 9 will give us 27 minus 16 divided by 72. (11 by 72). So gaining ratio is 13:11. Please start the second decimal. What is the second decimal? Goodwill. First do for JLP, then we can do for goodwill. Step 2, adjustment for which one? Joint life policy surrender value. Yes, listen. Surrender value. What is the surrender value of the JLP given? 1080. Adjusted through capital account, no cash or bank account. Is it given that it is realized? No. It is just adjusted through capital account. Firm had a joint life policy for 6,000. Premiums were paid amounting to 2,500. What is the surrender value of the policy? 1080. The joint life policy should not appear in the balance sheet. Did he get surrender value like last question? No. Just adjust through capital account. What is entry for adjusting through capital account? Continuing partners capital account data to retiring partners capital account. Who are the continuing partners? Pass the entry. G's capital account debtor, N's capital account debtor, to which partner? Retired. M's capital account. What is the total joint life policy? 1080 into what is M share? 3 by 9. 1080 is the surrender value. அதோட M ஓட share எவ்வளோ? 3 by 9. This will be adjusted in which ratio? Gaining ratio. Any adjustment done will be adjusted in which ratio? Gaining ratio. 13:11. 190. 195. 165. Why are we adjusting through capital account? Because it is given JLP not to appear in balance sheet. Since it is given in the question, JLP not to appear in the balance sheet, we are adjusting through capital account. This is the first part, adjustment for JLP. Next, for goodwill, start. Adjustment for goodwill also through capital account now. Because no goodwill should appear in the books. Now work out goodwill. Goodwill is average profit into எவ்வளோ years? 2 years average profit னு சொல்லிருக்கான். So tell me what will be the average profit? Read carefully and answer this. What is the average profit? Yes. Pay attention. How to work out average profit? Read the question. This is why I insist on reading the question. Just like that, copying solution will not work. Any answer for average profit? 5,400. Any other answer? 7,000? 7,000. Okay. Any other answer? 5,440. I'm just asking you to work out average profit. அதில் எவ்வளவு answer வருது பாருங்க. If you don't read the question properly, you will not get a correct answer. Read the question. Yes. Everybody paying attention. Paying attention. Look at average profit. Average profit of how many years? 3 completed years preceding the date of retirement. Look at the words used, please. 3 completed years in the word use பண்றான். Paying attention. When the partner retired? 31/12/2013. I am retiring on 31/12/2013. Is the year complete today? I am retiring on 31/12/2013. Is whether the full year is complete? No, it is 364 days only. That year is not complete. You take only how many years? Completed years. Completed years means the year should have been completely over. I am retiring on the last day. Look at the clear information given in the question. So don't take 2013 profit. Don't take 2013 profit. Year is not complete. So you should take 2012, 2011 and 2010. Pay attention. 2012 year is complete. 2011 year is complete. 2010 year is complete. Don't take 2009 also. Why? Instructed 3 completed years. 3 completed years instructed to us. So average profit will be 7,000 plus 6,000 plus 3,200 divided by 3. What is average profit? 5,400. Average profit into how many years? Into 2 years will be the goodwill. What is the goodwill? 10,800 is the goodwill. Goodwill is valid at 2 years purchase of average profit. I repeat once again. Why are we not taking 2013? Why are we not taking 2013? The partner retired on the last day. Before the year is complete, he retired. So don't take 2013. Take 2012, 11 and what? 10. 3 completed years only you should take it. Pay attention. Balance sheet la goodwill irukanu parunga. If there is any goodwill, you have to write off. No goodwill is there. Now wait. What to do goodwill? Adjusted through which account? Capital account, same journal entry. It should also be adjusted through capital account. Same journal entry will pass. It is 10,800, zero extra. 10,800 into 3 by 9, how much it will be? 3,600. So that will be adjusted in gaining ratio. 1950, 1650. I repeat, pay attention. Why JLP account is not recorded? Mentioned to us in the question clearly. What is mentioned to us in the question clearly? The surrender value of the policy is 1080. JLP should not appear in the balance sheet. That's why we adjust through which account? Capital account. Goodwill, we take only 2012, 11, 10. Why? Instructed clearly 3 years average profit. In the classroom la panna overlook mistake the exam layum pannuvom. 3 years none okay, let's take 3 years. 13, 17, 13, 12, 11. இல்ல கொடுத்த எல்லாத்தையும் average பண்றது அந்த மாதிரிலாம் mistake பண்ணுவோம். 3 years exactly you should take completed years only. So 12, 11, 10 divided by 3. Goodwill is valued at how many years purchase? 2 years. So wait. Goodwill is raised? No. Look at the question. என்ன கொடுத்திருக்கான்? No goodwill account has to be raised. No goodwill account has to be raised. So that's why continuing partners to retiring partner in which ratio? Gaining ratio. Continuing partner to retiring partner in gaining ratio. Take up this. Then next step we can work out. Step 3 which account? Revaluation account based on adjustment number A to J. In this question, both, what is the required? Both JLP is adjusted through capital account. They specify not to appear in the balance sheet. Goodwill also, 5,400 average profit. 2 years average profit is goodwill. So, continuing partner to retiring partner. Because goodwill should not appear in the books. Gaining ratio will be adjusted. Please keep it in mind, the gaining partner will compensate what? Sacrificing partner. In case of retirement, who are gaining? Continuing partners are gaining. The retiring partner is sacrificing. Then start revaluation of. I hope this is the 7th account we are doing in revaluation. It is same as admission. Credit the gains and debit the losses. என்னென்ன gains and losses இருக்கு பாருங்க. Stock to be written down to 7,520. To stock 8,000 minus 7,520. How much will come? 480. Stock 480 அப்புறமா. What is the next one? Provision for bad debts. எவ்வளவு percentage? 5%. 5% will be 250. Minus already there is a provision of 100. 5% is 250. Already there is a provision of 100. What is the extra provision you have to create? 150. 5,000 into 5% will be 250 minus already 100 is there. 150 you have to create. Then do it along with me. Don't wait. What is the next one? Land and building to return up by 5,000. It's a gain or loss? Gain. By land and building, how much? Written up by 5,000. So 5,000. Then what is the next one? Creating a provision for legal charges. Is it a loss or gain? Loss. Legal charges, how much you have to provide? 3,420. 3,420 aprom. Prepaid insurance. Prepaid insurance asset dane. Again, prepaid insurance, bringing prepaid insurance asset, bringing an asset or recording an asset is a gain for us. How much you have to bring? 2000. அப்புறம் வேற என்ன இருக்கு பாருங்க. Expenses owing brought down to 775. By expenses outstanding or owing, balance sheet level இருக்கு பாருங்க. 900 minus 775. We are reducing a liability. Reduction in liability, is it a gain or loss? Gain. Expenses payable comes down. It's a loss or gain. Gain. Then creditors will give a discount. By creditors, எவ்வளோ creditors இருக்காங்க balance sheetல? 5,000 into what is the discount? 125. Reduction in creditors or discount from creditors is a gain for us. Then is it recovered or recoverable? Whatever is recoverable is a gain for us. Sir, and the 500 ஏதோ கொடுத்திருக்கானே last year written off doesn't matter for us. Whatever is recoverable is a gain for us. 350. Bad debts recoverable is a gain for us. Then by workman compensation, balance sheet la பாருங்க. Workman compensation in the balance sheet, how much is given? 1200. Now liabilities only 150 now. 1050 is a gain for us. Workman compensation in the balance sheet is how much? 1200. But now we have to pay only what? 150. 1200 minus 150. How much is a gain for us? 1050. Apram. Investments taken over by M for how much? Look at the balance sheet value investment. 9,700 taken over for 8,700. Investment loss. 8,700 எடுத்துட்டு போயிருக்காங்க. Balance sheet 9,700. There is a loss of how much? 1,000. Tally this and close. You will get profit or loss. Profit or loss, sir? Profit. This profit will be transferred to whom? All the partners in which ratio? Old ratio. Who are the partners? G, M, N. What is the old ratio? Transfer this in 4:3:2 ratio. The revaluation account, let it be admission of partner, retirement of partner, or death of partner. It is same. JLP adjusted through capital account. Goodwill is also adjusted through capital account because both of them should not appear in the balance sheet. Clearly instructed to us. What is step 1? New ratio, gaining ratio. Step 2, goodwill and JLP adjustment. Step 3, we prepared revaluation account. We will do step 4 of reading that adjustments, please. Case 1, case 2, case 3. Go through that. By 2 minutes. Shall we? Now, look at case 1. The entire capital of the firm is fixed at how much? Capital of the firm is fixed at 28,000 kududirka. Capital of who are G and N? G and N actually. G and N. Capital of which partner? Continuing partners should be in which ratio? New profit sharing ratio. This is related to revaluation or capital account? This case 1, is it related to revaluation account or capital account? Capital account. Case 2, paranga. Capital of GNN to be in which ratio? New profit sharing ratio. Case 3 also. M has to be paid through the cash brought in by what? GNN, and capital also will be in profit sharing ratio. So, case 1, case 2, case 3, will it affect our step 1, step 2, step 3? Step 1 is same, step 2 is also same, step 3 is also same. Only what will get affected? Capital account and balance sheet will change. Start. Capital account for case 1. Step 4 for case 1. For case 1. While closing that, we'll read it again and we'll solve. But as of now, just prepare the capital account. Just prepare the capital account. Who are the partners? Start. GMN. Start the capital account next. By balance brought on level irukku parunga. By balance brought on, what is the old capital? 17,600, then 13,200, then 8,800. By balance brought down. Do you find any old reserves? PF already adjusted. PF already adjusted. Workman compensation reserve also. இல்ல இங்க தப்பு பண்ணிருக்கோம் பாருங்க. Expenses owing 900 is okay. Creditors 5,000 okay. PF எவ்வளவு amount? PF how much amount? 1,000. PF 1,000 rupees. Yes. இங்க எதாவது தப்பு பண்ணிருக்கோமா பாத்துங்க. PF there is no change. Then reserve fund will be transferred to old partners. Reserve fund will be transferred to whom? Old partners. Okay, correct தான். அல்ல by reserve fund. Reserve fund will be transferred to old partners. What is old ratio? 4:3:2 ratio. Transfer பண்ணுங்க. 4:3:2 ratio. Transfer it in 4:3:2. This 5,400. How much will come? Four by 9, 3 by 9, 2 by 9. Work out பண்ணுங்க. 4 by 9, 3 by 9, 2 by 9. Work out பண்ண என்ன வருது? 2,400 1,800, 1,200. Then look at the entry we pass for JLP. Entry என்ன pass பண்ணிருக்கோம்? G's capital account data or N's capital account data to which capital? How to post this in ledger? To G and N capital in which column? அப்படியா? Think பண்ணுங்க. Which capital to be debited? Which capital to be credited? Which capital to be debited? Entry பாருங்க. இதுக்கு என்ன ரெஸ்பாண்ட் பண்றதுக்கு இருக்குன்னு அப்படியே உட்கார்ந்துட்டு இருக்காதீங்க. Which capital to be debited? G's capital to be debited, N's capital to be debited. Debit என்ன right in the left hand side. To N's capital. எவ்வளவு G's காலத்துல? 195. N's column 165. G, N to be debited. M should be credited by G and N's capital. Which partner retired? Which partner retired? So debit G and N, credit M. Then this is for which one? JLP. Goodwill க்கு ஒரு more entry pass பண்ணிருக்கோம் பாருங்க. Goodwill க்கு என்ன entry pass பண்ணிருக்கோம்? G's capital account debtor, N's capital account debtor to M's capital repeated. This one is for JLP. Next one to M's capital. This is for goodwill. 1950, 1650. This is for goodwill. First one is for JLP. This one will be by G and N's capital 3,600. By revaluation profit. What is the revaluation profit? 1,600, 1,200 and 800. Any loss to be adjusted? Please check. Asset side la loss irukka parunga. Like profit and loss account, advertisement suspense account and the mari. Do you find any losses in the asset side? No losses in the asset side. Now come to case 1, read it again. Case 1 la parunga enna kuduthirukam parunga. Entire capital of the firm is fixed at 28,000. Capital of G and N ought to be in which ratio? Wait. Anything told about retiring partner? Anything given about retiring partner, whether you have to settle or not? So if nothing is given, you can transfer to loan account. You can transfer to which account? Start. Come back to capital account. To M's, which partner retired? M's loan account balancing figure. What is M's loan balancing figure? 20,160. Yeah. This balancing figure of M we transfer to loan account. We cannot pay it because look at the cash balance, please. Cash balance எவ்வளவு இருக்கு பாருங்க. 5,500 தான் இருக்கு. அதுக்காக திங்க் பண்ணாதீங்க. Pay attention. 5,500 cash இருக்கு இல்லையா? Pay it to M. அப்புறம் எப்படி business பண்றது? If available cash is paid to retiring partner, then how will you conduct business? Unless otherwise it is specified in the question, transfer to which account? Loan account balancing. Wait. Can I put to balance carry down for others? Can I put to balance carry down just like that for others? No. Look at case 1. Entire capital of the firm, total capital of the firm, fixed at how much? 28,000. Total capital of the firm is fixed at 28,000. Capital of G and N should be in which ratio? New ratio. What is the new ratio? 5:3. So split this 28,000 in 5:3 ratio. Split this 28,000 in 5:3 ratio. 17,500 and 10,000. இந்த ரேஷியோல இருக்கணும். So to balance carry down is 17,500 and what? 10,500. Tally this, you will get the balancing figure as to cash. Surplus இருந்தா வெளியில எடுத்துட்டு போயிடலாம். Surplus paid. Surplus paid. What is the surplus paid? Balancing figure. What is the surplus? 21,600 total credit side minus the closing balance required minus 1950 minus 195. Surplus will be paid back. If there's a shortage, you bring in. If there is a shortage, you bring in. Buy cash, shortage, otherwise you can take it as a balancing figure. 12,135 இருக்கு debit sideல, credit sideல கம்மியா தான் இருக்கு. So you bring it. Once again, why M's capital is transferred to loan account? It is not specified in the question. We don't have a sufficient cash balance also to transfer to which account? Loan account. This balance carry down is worked out. So working note for us. We worked out this balance carry down. Right? Total capital is 28,000. G and N should contribute in which ratio? New ratio. This is the balance required. As a balancing figure, we get the surplus paid off or shortage brought in. Then for this, we have to prepare the balance sheet. Try to prepare balance sheet with new assets and liabilities value. What is the mistake we have done in this question? யாருமே திங்க் பண்ண மாட்டேங்கிறீங்க. Go through பண்ணுங்க, problem go through பண்ணுங்க. There is one mistake we have done in this. PFLL. Look at point number J. Look at point number J. என்ன கொடுத்திருக்காங்க? Investment sold out or taken over? Taken over by which partner? M. அதை adjust பண்ணோம் இல்லையா? அப்ப ஏன் பண்ணல? So to investment, he has taken over investment given in the question. For how much? 8,700 investment எடுத்துட்டு போயிருக்கான். Balance தான் loan account க்கு transfer பண்ணும். To loan account will be the balancing figure. 20,160 minus 8,700. How much you will transfer? 11,460. Balancing figure transfer to which account? Loan account. Investment taken over by M given 8,700 is given in what? Adjustment number J. $11,460 we cannot pay now. 11,460 we cannot pay now because we don't have the cash. Only 5,500. And the 1955 in G's column and 1515 in N's column are surpluses and shortages. The question is they can give you the surplus or shortage can get it. They already can't afford to. Instead of two cash surplus paid, you have taken what? Current account. You buy current account to close. Only when it is mentioned in the question. Wherever capital adjustments are done, they tell you current account, use current account. Otherwise, change on. We'll see. Valuation. There's one liability. You can check the liability. Say employees here. Or the reservoir liability here. To whom it is? Reserve that belongs to owners, partners, shareholders. What is the reserve? That belongs to owners, partners, and what? Shareholders. Anything payable other than the owners, we call it as a liability. PF we have to pay for. Employees. Salary outstanding, rent outstanding. bonus outstanding, commission payable, all those are which one? All those are which one? Liabilities. That's the liability. That will continue in balance sheet. Employees PF put the liability cycle. That will continue as a liability in the balance sheet. PF given in the liability side. This employees provident fund will continue in the liability side. Start balance sheet after the firm of the firm after retirement. Have we taken up this capital account? Start. Everybody, have we taken up the capital account? Start. Balance sheet for case 1. This is for case 1. Liability side, listen. Capital account of which partner will come? GN which one? N. How much? 17,500 and what? 10,500. Total capital is fixed at 28,000. Then M's loan account and the balancing for what is M's loan account? 11,460 will come. Then what else will come? Expenses owing. Expenses owing would there come brought down to expenses owing brought down to 775. The new value will come. Expenses owing brought down to 775. Then what is the next liability? Creditors 5,000 minus evlo percent discount? 2.5% discount. That is 125. 5,000 minus 125. 4875. Then what is the next one? PF will continue. No change in the liability. PF will continue how much? 1,000. PF will continue as 1,000. Then workman compensation. That is given in the adjustment. It is only 1,050. 1,050 revaluation account payage. 150. Workman compensation payable is only 150. So capital of the partners, M's loan account, expenses outstanding, creditors, PF and which one? Workman compensation given in the adjustment. Asset side வாங்க. Bank balance already எவ்வளவு கொடுத்திருக்காங்க? 5,500. Add who brought money? Look at the capital account. N brought how much? 1515. Less M G எவ்வளவு surplus pay பண்ணிருக்கோம்? This 1955 paid. After this balance will come in the balance sheet. JLP surrender எல்லாம் பண்ணல. JLP was adjusted through capital account. Last question it was surrendered, so cash came in. In this problem, goodwill and JLP adjusted through what? Capital account. Then which asset? Stock account. Any change in stock? Okay. Debtors. Debtors 5,000 minus new provision. New provision 250. $4,750 debtors balance. Then stock, any adjustment given? Stock to be brought down or valued at 7520. Stock 7520. What is the next one? Investments, will it come? No. It is taken over. taken by M. It will not come. Investments are taken over by M. Balance sheet lower other than land and buildings 25,000 plus 5,000 upward revaluation 30,000. Then not over. Not over. Prepaid insurance. Prepaid insurance. Which adjustment? Adjustment number? Yeah. Prepaid insurance. Unexpired insurance. How much? Then. Not over. What is the next one? Yes. Bad debts recoverable. Bad debts recoverable. Where adjustment? Adjustment number? H. How much is given? 350. Then. Outstanding legal charges. Which adjustment? Adjustment number? D. How much? That's it. Which partner retired? M retired. Capital of G and N. Then M's unpaid balance transferred to loan account. Expenses new balance outstanding. Then creditors after discount. PF will continue. Workman compensation after adjustment. Adjustment number. Which adjustment number talks about workman compensation? Then outstanding legal charges. New liability brought in. Adjustment number D. Bank balance after adjustment. N brought cash in the 1515. M took away 1955. Debtors minus provision. Stock valued at this one. Investments will not come. It is taken over by M. Land and buildings. Prepaid insurance and which one? Bad debts recoverable given in adjustment number H. We have done only for which case? Case 1. Case 2, case 3, wait for your total answer. Step 1, step 2, step 3 will not change. What is step 1? Old ratio will not change. What is step 2? JP goodwill will not change. What is step 3? Next one. Revaluation account will not change. What will change? Capital account and balance sheet only will change. So for the next 2 cases, we are going to do only what? Capital account and balance sheet. Case 2 பாருங்களேன். What is the difference between case 1 and case 2? Listen. Capital is 28,000. Capital is how much? 28,000 in case 1. That is to be distributed in which ratio? New profit sharing ratio. Case 2 la பாருங்க என்ன சொல்லிருக்கான்? Capital of G and N ought to be in proportionate to new profit sharing ratio. Listen. What is missing between case 2 and case 1 and case 2? The capital is not fixed in this question. So what to do? Simple. Case 2. This is for which one? Case 2. All the adjustments are same. Except this cash surplus or shortage. This closing balance. All the adjustments are same. Okay. Pay attention. Opening balance will be same. Reserve fund will be what? The same. Credit G and N for JLP and goodwill. Debit for JLP and goodwill. Investment taken over by what? M. Balance transferred to which account? Loan account. Paying attention. Till this point, what is same? Case 1 or case 2, it is same. Now, the closing balance in the last case was mentioned as how much? 28,000. Share it in ratio. Give the missing. What to do? Paying attention. Now we have to work out by rough balance method. Rough balance of which partner? G. How to work out rough balance? Add up all the credits minus debit. So 17,600. Calculator 2,400 plus 1,600 minus 195 minus 1950. 19,455. Yaroda capital? G's capital. G's capital. Pay attention. 19,455 is capital, G's capital. Then capital of N, same way, N paranga credit line 8,800 plus what? 1,200 plus 800 minus 165 minus 1,650. This will give us whose capital? So what is the total capital? G plus N. 28,440. This is the total capital. It should be in which ratio? Profit sharing ratio. What is the new profit sharing ratio? 5:3. The new ratio is split pannunga. 28,440. New ratio is split pannunga amongst which one? G and N. For G and which one? Split this in 5:3 ratio. 17,007, 17,775, then 10,665. I repeat, pay attention. Everybody pay attention. Listen. Opening balance, this house, adjustment for goodwill, JLP, investment taken over. M, loan transferred to loan account. Till that point it is same. The question is, closing balance is not given to us. Last case la clear mention money now. What is the closing balance? 28,000. 5:3 they were mentioning. But in this case, the closing balance is not mentioned. So what do? We work out which balance? Rough balance of G and rough balance of which one? N. Then we get this 28,440. It should be in which ratio? Profit sharing ratio. That is the closing balance. That is the closing. So this is the closing balance. What is the closing balance of G? 17,775 and what? 10,665. Now also, you can think either logically or you can take it as a balancing figure. To cash, இது வந்து balancing figure எடுத்துக்கலாம். Or you can think logically also. What is the required capital? 17,775. But what is the capital available? 19,455 available. Required is only 17,775. Surplus you can take it back. Surplus will be how much? 1680. Shortage irundha cash kondu vaanga. This can be taken as a balancing figure also. For example, what is required? 10,665 required. But minus what is available? Kammiya irukna, bring the money. 1,680. In this question, the amount is equal because are we adjusting based on external capital or internally adjusted? Internally adjusted. 1680, 1680. It is coming equally because we are internally adjusting between what? G and M. Once again, I repeat. 28,440 is the rough balance to be adjusted in which ratio? 5:3 ratio. Surplus paid back, shortage brought in. Shortage brought in. Wait pannunga. Then, balance sheet prepare பண்ணும்போது what will be the impact? Balance sheet la capital will change. What is going to be the capital? 17,775. என்னோட capital எவ்வளவு வரும்? 10,665. What about other amounts? Will it change? It will not change. M's loan will be same, expenses owing will be same, creditors will be same, PF, all other things are what? Same. Bank balance, N how much he brings in? N how much he brings in? 1680. 1680. N how much he takes away? 1680 he takes away. Cash balance will not change. Cash balance will not change. All other assets same as case 1. Same as what? Case 1. Balance sheet also tallies. Now, what is the difference between case 1 and case 2? Case 1 la ஒரு capital கொடுத்திருந்தாங்க அந்த 28,000 we shared in which ratio? 5:3. So surplus taken back, shortage brought in. Shortage brought in. Then we prepare the balance sheet. Here what is missing? That capital is missing. We work out the balance of G and then before adjustment. We adjust in 5:3 ratio. That is what is required. Surplus இருந்தா எடுத்துட்டு போய்ங்க, shortage இருந்தா கொண்டு வந்துக்குங்க. Clear? And we prepare the balance sheet. Balance sheet, what will change? Capital account and which account will change? Cash balance will change. All other assets and liabilities are same. Total also how much? 50,000? 120. This is case number 2. Case number 3 பாருங்க next. M has to be paid through, listen, whose M? Retiring partner should be paid through cash brought in by what? G and N. Now, in case 3, it is asked to settle the retiring partner. Look at how much we have to pay to retiring partner. How much we transfer to loan account? 11,460 we have to pay. So that is case 3. All are same. Only difference is the retiring partner should be paid. Who should be paid? M should be paid. How to pay it? Instead of to loan account, it will be to cash account. To cash account, we have to pay this balancing for, we have to settle, sir. How to settle this? The old partner should bring in cash. Old partners should bring in cash. Not only that. The capital also should be in profit sharing ratio. Capital also should be in which ratio? Profit sharing ratio. Pay attention. In this case, opening balance is same, reserve fund is same, JLP goodwill is same, revaluation profit is same, then of course adjustment for JLP goodwill is same, investment taken over by M also same. How much you have to pay to M? எவ்வளோ pay பண்ணும்? 11,460. Wait, already they are having a capital of, இப்போ தானே ஒர்க் பண்ண rough balance. G, add up credit minus debit. What is the rough balance? 19,445. N, add up all the credits minus debits. How much they are having? 28,440 is the capital that they are having. Add amount required to pay whom? M. எவ்வளவு amount வேணும் நம்மளுக்கு pay பண்றதுக்கு? 11,460 சேர்ந்து அவங்க capital maintain பண்ணணும். So this will become the total capital required. Total capital required. What is the total capital required? 28,440 plus 11,160. This is the total capital required. What is the total capital? 39,400. It should be in profit sharing ratio. It should be in which ratio? Profit sharing ratio amongst whom? G and N. What is the profit sharing ratio? 5:3 ratio. ரொம்ப simple, sir. 28,440 is our capital already. To pay M, we want an additional capital of 11,460. What is the total capital? 39,900. It should be in which ratio? Profit sharing ratio. Profit sharing ratio, let's split பண்ணுங்களா. 39,900 into 5/8. This into 3/8. This is the capital required, right? What is the balancing for? Sorry, what is the capital required? 24,938 வேணும். அவங்களுக்கு எவ்வளவு வேணும்? 14,963 வேணும். This is the amount required. This is amount required. So balancing for a cash work out பண்ணிக்கலாம். எப்படி work out பண்ணுது? லாஜிக்கலா திங்க் பண்ணுங்க. ரெண்டு பேருமே இங்க cash surplus இருக்காது. No surplus. No surplus. ரெண்டுக்கு shortage தான் இருக்கும். எப்படி? What is the capital required? 24,938. What is the capital available? 19,455 na you have to bring in cash by cash both of them will bring. This is a capital required minus this is a capital available, balance you have to bring in. N also capital required is this much minus capital available is how much? 8985 na balance you have to bring. It will be like 5977. 5977 you have to bring. This is a balancing figure. Wait பண்ணுங்க. இந்த ரெண்டு அமௌண்ட் ஆட் பண்ணி பாருங்களேன். Add these two amounts. 5483 plus 5977. 5483 plus 5977. 11,461. Clear? G brings how much? 5483. N brings how much? 5977. What is the total? 11,460. Now what is the difference between case 2 and case 3? Case 2 stops here. What is the total capital? 28,440. We just split in 5:3. What is case 3? Additional information? We have to pay M through the cash brought in by what? G and N. So we have to pay 11,462 M. So total capital required is 39,900. It should be contributed in which ratio? Profit sharing ratio. 5/8, 3/8. It should be there as balancing figure. So shortage brought in. We can verify our answer also. How to verify? The amount brought in will be equal to the amount paid. Amount brought in will be equal to what? Amount paid. So balance sheet la change ஆகுங்க. Balance sheet la capital will change. Whether M's loan will come. Balance sheet la capital will be 24,938, 14,963. Whether M's loan will come. That is paid. Bank balance எவ்வளவு இருக்கு? 5,500. என்ன எவ்வளவு கொண்டு வரோம் cash? 5977. G எவ்வளவு கொண்டு வரோம்? இது ஆட் தான். Add G 5483 less paid for M. M க்கு எவ்வளவு பே பண்ணிருக்கோம்? 11,460 paid. So your cash balance will become the same. 5,500 plus money brought in minus money paid. It will give the same. 5,500 அதே answer தான் வரும். Balance sheet also will tally. 50,120. In case C also, what is same? Liabilities are same. Only difference is M's loan will not come. M's loan is repaid. M's loan is repaid. That will not come in the balance sheet. 0. Bank balance, opening balance plus N plus G minus M paid. So net amount 5,500.